In this video, I'm going to share with you my top 10 tips for trading the euro. We'll start with what type of trades to look for, the best times to trade the euro, the worst times to trade, my favorite euro pairs, and so much more. And if you watch to the end, number 6 and 10 specifically, I'll share with you 2 euro day trading strategies. If you want to be a consistently successful trader, you need to look at more than just support and resistance levels. You need to learn how to pick smart trades. So let's get right into it. Number 1, the euro is the best currency to trade because the euro dollar is the world's most liquid and actively traded currency pair. For traders, that means tighter spreads, smoother price action, and less unexplained pops and drops. It is the favorite currency pair for bank traders and the best currency pair for beginners. Number 2, if you're trading the euro, stick with trading the trend. The massive amount of liquidity helps to facilitate eurodollar trends, and once eurodollar gets going, it can trend for weeks, months at a time. Just take a look at this chart from July to September 2023. Eurodollar trended for 2 months straight, losing more than 600 pips in the process. Now, this is great for swing traders. It's a lot of pips. But even for day traders, by knowing that eurodollar tends to trend strongly, you also know the smartest day trades are the ones in the direction of the longer-term direction of trend. Number 3, just because there are 20 countries in the Eurozone doesn't mean that you need to follow the economic reports of 20 countries. That's too much work even for me. The only economic reports that matter are the ones from Germany and the Eurozone. And between those two, the German data tends to be more market moving because it is released before the Eurozone data. Germany is the largest economy in the Eurozone, making up about 30% of Euro area GDP. France makes up 20%, so between Germany and France, that's 50% of Euro area GDP. Now, the only data that moves the euro is German and Eurozone data. If you really want to get specific, it is the inflation, PMIs, employment, GDP, and sentiment reports like the IFO and ZOO that matter. Knowing what data matters and what doesn't matter is very important to selecting the best trades. Let's take a look at how I applied it in real market conditions. I know that the German ZOO survey, which is a measure of investor confidence, is an important report. And I felt that given the slowdown in the German economy, rising interest rates, higher energy prices, that investor confidence would weaken. So I was looking for the euro to sell off on the back of the German ZOO survey. Combining fundamentals and technicals, I took a look at my zip charts and saw that eurodollar was in my zip buy zone with the green background. So pass, that's not a trade for me. But then I looked at EuroCAD. It was in my zip sell zone, which is the red background trading below the indicator line. And I like the fact that Canadian dollar was rallying on the back of a strong jobs report and oil prices was soaring at the time. So fundamentals and technicals were aligned for the euro dollar trade. The ZOO survey came out weaker and the currency pair dropped nearly 80 pips. Tip number 4. Heed the ECB. If ECB officials are saying that they are looking to raise interest rates, listen to them. Don't doubt them. Unlike some central banks who like to surprise the market with changes and catch the market off guard, the European Central Bank is not one of them. They like to prepare the market for any potential changes to interest rate. Their best case scenario is that they change interest rates and there's little to no volatility in currencies, equities, or bonds. Central banks, hate volatility. If possible, they'd much rather signal to the market far in advance what they plan to do. That's what guidance is, giving investors and traders plenty of time to price it in. So if Eurozone policymakers are telling you that higher rates is needed, then you need to know that even if you think that they're not going to raise interest rates, don't fade what the central banks are telling you. Listen to them. By the way, I shared a number of these trading tips like this every single week. So if you don't want to miss the next one, subscribe to my channel. Number 5, barring any political troubles, the euro is usually perceived as the anti-dollar, which means that euro-dollar flows depend on the market's appetite for US dollars. So if the US data is good, the euro-dollar will most likely sell off. And if his US data is weak, euro-dollar should rally. We used this tip actually to live trade when we sold the euro. In this chart here, after the stronger US retail sales, PPI, and jobless claims report, eurodollar was in my BKTraders zip sell zone already, so the fundamentals and technicals were aligned, and I provided a very good trading opportunity. Number 6. This is one tip that can turn into a trading strategy. Eurodollar loves to gravitate to round numbers. So if we're trading within 20 pips or a round number, we had it tested before during the active market hours, which is 6 a.m. to 10 a.m. New York time. There's a very, very good chance, in my experience, almost 90%, that will make a run for the test of the round number. Here's an example of eurodollar in this chart rallying At the early New York open, it's hovering close to 109, but not quite testing it. Then US traders join the market, and boom, it tests and breaks that level. If you're a day trader looking for quick pips, it's a great strategy that you can definitely want to consider, but only during the active market hours. Number 7. Speaking of the active market hours, the best times to trade the eurodollar is between 4 a.m. to 10 a.m. New York time. Most Eurozone economic reports are released between 4 a.m. and 5 a.m. depending on whether it's summer or winter, and that's when the moves get going. I live in New York, so I'm currently trading eurodollar and euro crosses between 6 a.m. to 9 a.m. New York time. Number 8. The worst time to trade the euro is between 12 noon New York time, which is also the London close, to 8 p.m. New York time. The European traders are usually wrapping up to go home. Traders are in Asia who are asleep, and all of the European and US data, which, basically what moves the markets, is already out. So that means there's a greater chance of consolidation than big move continuation. Number 9. Most people trade eurodollar, but please don't overlook the crosses. I particularly love to trade euro crosses during the Asia session. In fact, euro Aussie, euro CAD, euro Kiwi are my most consistently profitable currency pairs. They are very trending, and without the US dollar to muddy up the pair, they are much better fundamental trades. They have big moves, the zip signals are consistent, and like you can see this euro Aussie zip sell signal. If you pick the right trades, it will move quickly with very little retracement. Number 10, we're finally up to number 10, my final trading tip, which is to watch for the London session breakouts. What I like to do is to mark the high and low during the Asia session between 8 p.m. to 2 a.m. New York time. Then I would wait for the eurodollar to break either the high or the low by 10 pips or more because you want a meaningful break, like you can see in this chart here. And then you can ride that move for 15 to 30 pips for a day trade. So I talked a lot about my zip indicator today. If you want to learn more about how it works, check out the description below for the links. And if you enjoyed this video, please take 2 minutes to like and subscribe to my channel for more updates. I'll see you next time.